right, ladies and gentlemen, it's Aaron Fregnito back with another episode of the Passive Cashflow podcast. I'm your host here. We've been, I think we're up to episode over 170 here. Very excited to have our listeners. By the way, if you're enjoying our content, be sure to share this with someone you think would gain value from learning how to build their wealth in real estate and other investment classes as well. And give us a review on a podcast platform that you're listening to, and give us a like as well if you're enjoying our content here. But my friends, we have an excellent guest here today. We have Steve Selengut. Steve is an RIA, Registered Investment Advisor, and Steve has a really unique investment strategy that I don't even fully understand myself. So I'm excited to learn more about it today. And he's producing really solid returns for his clients. And so Steve, how are we doing today?
Doing fine.
Excellent. Thanks for coming on the show here. You know, I was glad to connect with you. I always love talking with a new RIA. It seems like every RIA I know has a new investment strategy, you know, with some in the stock market, bond market, real estate, closed-end funds, as you focus on. But before we get into your investment strategy and how it works, first, let's learn a little bit about you and how you got started in this space.
I got started in investing back in, when I was about 25 years old. That would be in 1970. I got started, and it's interesting enough. My background, my family background, is in real estate. My dad was a developer and builder, and had a vertically integrated business in a place called Lake Apacong, New Jersey, which is about 45 miles outside New York City.
Oh, I know where Lake Apacong is. I was almost going to develop a huge storage center there. And I drive through there when I go skiing. Yeah.
Oh, when you go up to Sussex County to ski?
Yeah, I mean, there's terrible skiing in Mountain Creek, but it is very close. It's literally an hour from where I live. So if you want a really, bad day of skiing, Mountain Creek's a great place to go. Yeah.
Where do you live?
I live in Millington, New Jersey, near like Basking Ridge. Yeah.
Oh, all right, great. Yeah, I know about that.
Yeah.
So anyway, he had this property on Lake Apacong that he developed, and he had three or four distinct cash flows. Mm-hmm. He had cash flow coming in from selling the property, from building the homes, from renovating the homes when people became permanent instead of summer residents. He had a lumber yard that all his contractors used to build. He had an insurance department that sold the insurance to them. Wow. And finally, he loaned them money to
smart man.
If they couldn't get the mortgage from the bank, or he competed with the bank and just charged them less.
Right. Wow.
So I grew up with this idea that the most important thing you can possibly have is this cash flow, this income coming in, and he did beat that into our heads, of course. So when I first got my hands on an investment portfolio, and fortunately, my situation was such that I did get that into my hands when I was about 25. Literally had a pile of stock certificates dumped on my desk. And you're probably too young to even ever seen a stock certificate.
Yeah. No, I'm all.
They used to be pieces of paper, and it was just like the title to a car.
Yeah.
You could turn it over, sign it, and give it to somebody else. They could pay
those days are gone, my friend. Yes.
Those days are definitely gone. But anyway, I started investing, and interestingly, all the stocks I owned were dividend payers. And then I started looking with my broker. I started looking at charts, and I looked at how they fluctuated in price over time. And think of this as the Dow 40 stocks. That quality of company. And over time, they all go up and down, up and down. So what if, when you saw one of them was down, you bought it, and when it went up 10%, you sold it. And then you found something else, did the same thing. Oh, and lo and behold, this one's down again from where it was, where its high was. So you buy it back and you do it again.
Yeah.
And things like Pepsi and Esso, Exxon, all the oil companies, healthcare companies, everything has this cyclical and fundamentally volatile nature over time. And we just started trading.
Yeah.
while the dividends kept rolling in as well.
Mm-hmm.
So within 9 years,
Mm-hmm.
1979,
Mm-hmm.
I was making about five times what I was making going to work in New York.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Wow.
So I
This story, just to butt in for a sec here, the story reminds me of Wolf of Wall Street. When they're in the spot, they rent the car garage and then they're cutting the penny stocks and they have the paper going. I love that movie. It's a great movie. Anyway, I know you were doing a much more honest business.
I was, yeah, a little bit. But the idea was that
Yeah.
I figured out that, hey, a lot of my friends are in business and have
Mm-hmm.
investment programs, and they don't
Mm-hmm.
have time to look at them themselves, and they're just hoping their broker will do right by them.
Sure.
I can do it for them. So that's when I got my RIA and
Mm-hmm.
stuff like
Mm-hmm.
that.
Yeah.
So I grew the business from less than 1 million, let's say, to
Sure.
110.
Wow.
But
Nice.
it took 40 years,
Right.
but
Right.
it was my business. It wasn't through anybody. I
Yeah.
was always a private investor. I sold it.
Yeah.
I sold the RIA business. Actually, I stopped being an RIA about 10 years earlier because of the pressure of
Mhm.
compliance and the
Sure.
SEC and that type of stuff. So I went to work through an IRA.
Yeah. Well, it's
And
even worse now. Yeah. It's even harder.
oh, it's getting worse all the
Yeah.
time, sure.
Mm-hmm.
Um, so I sold that business in 23,
Mm-hmm.
started a coaching business, wrote Retirement Money Secrets,
Mm-hmm.
and started to bring my income focused approach to investing to people I had never known before, of course,
Yeah.
but through the coaching. And then most recently, we started a private community
Mm-hmm.
um, to educate people on income investing as opposed to just chasing that market value rainbow.
Yeah.
And you can't spend market value. You can't
Mm-hmm.
spend total return.
Mm-hmm.
But just like in real estate, you can spend rent when you
Right.
receive it.
Right.
You can spend insurance premiums. You can spend. So
Yeah.
that's the type of approach, and that's what I'm doing now. I'm
Yeah.
bringing this approach to as many people as possible. And the
There's
book
nothing. Yeah. Go ahead.
and the book has sold 5,000 copies.
Oh, very good.
So
Oh,
there's no shortage of phone calls about how do we actually do this, Steve?
right. 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 Right.
Been good.
That's excellent. Excellent. Wow. Okay. Excellent. There's nothing like cash flow. I do love cash flow probably the most out of all the benefits of owning real estate. Tax depreciation's great. I don't really pay any taxes because we primarily refinance our assets and we have enough real estate to give. We also do cost segregation studies and front load our tax depreciation. And we have operating companies that throw off paper losses. So we're able to really legally avoid paying taxes, which is a great feeling. But cash flow is a beautiful thing. We have a few properties now that are nicely stabilized and produce some consistent cash flow. And it's just so nice at the end of the quarter to kind of get that. It's not a huge payout, but a nice little distribution, and it helps you pay the rent, keep the
Hmm.
lights on, and cover your living costs. And there's nothing like a nice refinance or sale of a property too to get that huge six-figure payout. That's a beautiful thing also, but it takes time to get there. Right? You're not
Right.
really. It can take 5 years, 4 or 5 years to get to a refinance of a property or a sale of a property. And well, once you sell it, you have to pay capital gains tax, and then you lose that cash flow machine. So I like to hold on to my real estate, but cash flow is a beautiful thing. Absolutely. Absolutely. And so when you are, so let's break a little bit more into the types of assets you actually invest in to create this consistent income stream. You spoke about real estate, you spoke about insurance premiums. and a closed-ended fund. So what is a closed-ended fund? Maybe we could start there.
Well, a closed-ended fund is you're familiar with ETFs, of course, which is a fund,
Okay.
and mutual funds.
Yes.
Closed-end funds originated um, more than 100 years before ETFs and a few years, 20 or so, before mutual funds in
Mm-hmm.
Europe back in the early 1800s.
Mm-hmm.
The difference, the primary difference, I mean, all of them hold a group of securities of a certain type or maybe of a variety. They hold these securities and they are passively managed or managed most of the time, or in CEFs, managed all the time completely.
Mm-hmm.
But CEFs are pass-through trusts, which I'm
Okay.
sure you're familiar with. They have to pay to their shareholders 95% of the income they receive.
Okay.
So let's say they hold a portfolio of tax-free municipal bonds and
Mm-hmm.
they have 100 million worth of bonds
Okay.
and they're all yielding 4%. All
Mm-hmm.
that money is going 95% of it is going to the shareholders. They're not using it to build their enterprise. They're not buying more buildings. They're not buying more of this. All they're doing is investing. And they're going to be the ones that buy the bonds at a discount and
Yeah.
sell them when they go to a premium. They're not
Right.
going to be the ones that just hold on to them and clip the coupons.
Mm-hmm.
So you've got that going on. Not only that, just as we do in real estate, nobody goes out, or at least not too many people go out and pay cash for that apartment building. They
Mm-hmm.
borrow the money
Oh, sure. Leverage.
and, and they buy something and they know that they're going to be able to generate more income than the payments.
Yeah.
That's why they do it.
Sure.
The same thing with these trusts. They
Mm-hmm.
can borrow money without it being a margin loan or anything like that. Borrow money, and instead of buying another building, they buy more securities.
Mm-hmm.
So for every dollar of actual investment from shareholders,
Mm-hmm.
they have another pool of capital that's in the fund that produces income.
Okay.
So instead of municipal bonds right now yielding 4%,
Mm-hmm.
a closed-end fund of the same municipal bonds is paying 6.5%.
Mm.
And instead of waiting for a semi-annual payment, you're getting a monthly payment.
Okay.
Boom, boom, boom.
Nice.
The same principle carries over to those that invest in preferred stocks, in mortgages, in income real estate,
Mm-hmm.
and in the stock market.
Yeah. Yeah. Mm-hmm.
So this is the type of vehicle I use. The average yield in tax-free is about 6.5% today. The
Mm-hmm.
average yield in taxable um, closed-end funds is about a little over 10%, and the average yield on equities, you're not going to believe it, is just under 10% in
Okay.
today's market.
You're
So
talking
you
about,
can so you could own Tesla, you could own Nvidia, you can
yeah.
own Microsoft, and
Right.
instead of it yielding you 0%
Mm-hmm.
in the closed-end fund vehicle, it's yielding you almost 10%.
In cash flow distribution, and then you also have the equity gain on top of that.
If the market goes up, you can take advantage of that equity gain and produce income stream number two,
Right.
the
Right.
capital gains.
Right. Exit stock
Right.
over time. Yeah. Cash in your
Not
equity.
even over time. You actually take it.
Mm-hmm.
You take it. You take it on the closed-end fund
Mm.
as
Okay.
the owner, and then you just buy that closed-end fund. Do it again, and if it doesn't go up, fine. You're still getting 9% yield.
Mm-hmm.
If it does go up, you've got the dividends you've received, and then you take the profit, and then you
Mm-hmm.
do it again. You know,
All right. And then what happens if the stock goes down?
if the stock of the closed-end fund goes down,
Well, the stocks
or
you're invested in with the
or the
closed.
stock market, let's say the stock market
Yeah.
crashes.
Yeah. Sure. Mm-hmm.
How many in all of the crashes we've experienced, only in the Great Recession, when it was really finance related,
Mm-hmm.
did we have situation where banks or Merrill Lynch or Lehman Brothers actually went out of business.
Mm.
In most of the major corrections, they went down in price, but their dividends were never. never impacted. Their business model didn't change.
Right.
In in the COVID recession,
Hmm.
they they realized they could get the same job done, have their people working at home, and not, you know,
Right. Right.
so they managed to. Very few people, very few companies um, cut their dividends.
Yeah. Yeah.
Okay,
Well,
they cut
COVID.
their costs.
Yeah. Looking back, right? What, 5 years ago, right? I mean, COVID was 5 years ago. Can you believe that? And it was a scary time for us small business owners for sure. However, it caused an incredible boom, right, in real estate and the stock market, and it goes to show, don't sell. Hold on to
Oh, right,
hold
yeah.
on to your property, hold on to your portfolio, right, and I had a few investors that I know panicked and like just exited the stock market at the bottom,
Oh, sure,
and
they always do.
right,
Yeah.
I was saying, don't sell, hold on, it's gonna come back. There's a scare going on, and of course, within 6 months, the market was roaring back, and real estate then had an incredible 4-year run, pretty much, that just started to taper out maybe 18 months ago.
Right.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth, so find out if you qualify at peoplescapitalgroup.com. But so yeah, just it goes to show you got to buy low, sell high, and but that's an interesting strategy of being able to kind of invest in these closed-ended funds. And now, what is the minimum investment generally for these types of
Oh,
opportunities?
they trade like stocks, and
Okay.
they're liquid, and you can trade. They trade on exchange. So
All
think
right.
about how neat it is to trade bonds and real estate
Mm-hmm.
instantaneously by pushing a button
Mm-hmm.
as
Mm-hmm.
in a stock. Yeah, so there's no problem trading them whenever you want.
Mm-hmm. Okay.
And you can own. There are in my selection universes, and these are securities closed-end funds that I vetted. They have to
Mm-hmm.
be in business 5 years,
Sure.
consistent dividends. Um, I like them when they have a variety of types inside, but there are just that are sector specific at all
Mm-hmm.
as well. And I
Mm-hmm.
develop these universes of them, and I look at the consistency of their distributions over time, and you can
Yeah.
really see the patterns of change in interest rates,
Mm-hmm. Mm-hmm.
by the prices and the distributions and so
Mm-hmm.
on. But
Okay.
yeah, it's really an easy way to invest in every area of the stock market and every area of the income focused market
Yeah.
in
Mm-hmm.
the form of the stocks
Right.
themselves.
Right.
And they contain an average in the income side over 300 securities in each fund, and in the equity side over 200 in each fund. And I won't buy them unless they have at least 50.
Right. Okay.
So the difference between owning the individual stocks is if that one company goes under,
Mm-hmm.
it's the same principle as the mutual fund. If
Right.
one company goes under, you don't even know it.
Yeah, you
Whereas in
diversify.
the stock market,
Hmm.
I mean, it's a big deal.
Sure, sure, absolutely.
So,
And is that also how you invest in real estate, these closed-ended funds that are invested in multiple REITs? Is that correct? Or how do your real estate investment?
multiple REITs or income properties themselves.
Right.
Yeah.
Hmm. Okay. Okay.
Or,
So you're,
I mean, there's probably 100 different big board companies that have a real estate type
yeah.
uh, business, and they would be
Hmm.
in an equity closed-end fund that
Hmm.
specializes in real estate. Yeah.
Yeah.
So you
Okay.
can do anything you can do in an individual basis
Hmm.
or an illiquid basis,
Hmm.
like mortgages and bonds and so on, in real estate. You
Yeah.
can do in a liquid form in the stock market without huge amounts of money on
Hmm.
the investment side.
Hmm.
The average, I don't have an equity closed-end fund
Hmm.
that is over $40 a share. The average is probably about The average price per share is papers. Wait a minute. The average price the last time I did a universe, which was the end of the year, the average price per share was $15.
Okay. All
So
right.
you
So you
can
could kind of dip your toe in the water with a few
Oh,
$100 or
sure.
so,
You can do you
Yeah.
can put your kids college fund in this with no trouble at all. And
Right, right.
it's yielding 9%, and it can be passive.
Mm-hmm.
I mean,
Of course. Well,
you don't have to take profits.
yeah,
I
you could
mean,
just
I'm
roll.
a profit nut. I take
Yeah.
profits.
Well, sure, sure. Well, you have a lavish lifestyle you need to uphold, of course.
We try.
And so you could roll the dividends back in, right? And you can kind of build that portfolio over time. Do you have to be an accredited investor to invest in these opportunities?
I don't know. Not at
Okay.
all. I mean,
Okay. Mm-hmm.
most of the
Probably not.
people that come to me have no financial background other
Yeah.
than having had wealth for some time
Yeah.
or
Yeah.
had this 401k that they hope they still have some
I,
value when they retire. But
yeah,
no,
these don't sound like you have to. They sound like Reg A's. I don't think you'd have to be accredited. You would know
no,
it.
you don't have to be accredited
Yeah, yeah,
at
of
all
course.
to
Yeah,
invest it.
yeah. We're in a different space here in the specific real estate investment opportunities. Our opportunities investors do have to be accredited to invest in the equity funds and our opportunities there. Now, our debt fund investors don't have to be accredited. They just have to be a sophisticated investor. So that's a Reg D 506B where you don't have to be accredited. But for our apartment buildings that we purchase, you do have to be an accredited investor, net worth of 1 million, not including your primary residence or income of 200,000 individually or 300,000 household income, right? So there's a bit of a qualification process there. But anyway, let's not get off topic there. So that's pretty interesting, Steve. I like what you do there. The diversification sounds excellent. The consistent dividend payout is attractive as well. Let's pivot a little bit and let's talk just kind of about the market. I mean, my business partner and I were looking at our stock portfolio, our personal stock portfolio. I have a little bit of capital in the stock market, of course. Most of my capital is in real estate, but um, and we were like, holy mackerel! You're just sitting in mutual funds for the last few years, like most investors do in the stock market, like myself, who don't really know much about it, but just want to have a few shekels in there. Um, it's been good. It's gone up like 20% in the last year. And yeah, there's been a correction more recently. There was kind of a Trump bump and then a bit of a correction now. But it's been going up, up, up. Like what's going on here? Are we going to see more of a massive correction in the coming years? I feel like we're kind of due for one at this point. Or what's your crystal ball telling you right now?
Oh, I guess that's where I differ from most investment people.
Mm-hmm.
I have um, I don't care which way the market goes.
Okay.
If it
Okay.
goes up, I know I'm going to have profit-taking opportunities. I'm going to take advantage of them.
Sure.
And if it goes down, since I'm working with a universe of securities that I've vetted for
Mm-hmm.
quality, diversification, income production, and so
Mm-hmm.
on,
Yeah.
I'm just going to take those opportunities to add to those positions
Mm-hmm.
or create new ones because my cash flow is so huge, that I can buy a whole new position or I can add to several positions that are down in price. And I use what I call market cycle investment management. So like right now, the bond market is really much lower price wise than it was when interest rates were zero a couple of years ago.
Sure. Mm-hmm.
And the stock market is very close to an all-time high. So
Yep.
when I invest in an equity position, a stock-based closed-end fund, I'll probably buy about half of what I normally would start a
Mm-hmm.
position with,
Okay.
so that when the market goes down, I'll be able to add to it
Mm-hmm.
without creating a diversification problem. My diversification in my portfolio, for example, and I own several hundred of these closed-end funds, I don't have anything that represents more than 2% of my portfolio. So if
Mm-hmm.
it goes under, I mean, I might even notice. I would
Mm-hmm.
notice, but it's
Yeah.
not going to be a big pinch.
Sure.
So knowing I want to never get as high as 3 or 4%, I'll
Mm-hmm.
start my position at a certain level
Yeah.
so that I'm able to add to it. And I've experienced corrections that have lasted 18 months to 2 years,
Sure.
like
Sure. Yeah.
1987
Yeah.
before your time.
I was born then. That's the year I was born. Yeah.
Okay.
Mm-hmm.
Yeah, well, that was the year that we had a stock market crash, October 19th, my brother's birthday.
Mm-hmm.
And
Mm-hmm.
I remind him of that every year,
Yeah. That's interesting.
you know, but and then we had the dot-com bubble in around
Sure.
2000.
I do remember that. I do remember
Yeah.
that. I was in
Yeah.
high school. Yeah. Mm-hmm.
Yes, so even in those major corrections, they still only lasted never 2 years. I mean,
Mm-hmm.
we've had some situations where it was pretty much of an even plane for a couple of years
Yeah.
without the
Yeah.
big run-ups.
Yeah.
So right now, yes, in answer to your question, we are due for a correction.
Mm-hmm.
We've had a nice little run-up since 22.
Yeah.
Really.
Absolutely.
We
Absolutely.
had we had over we had 57 new all-time highs in the S&P in 2024.
Okay. All right.
But even so, even at 6,000, it was still not that much ahead of where it was in in January 1st, 22. You
Mm-hmm.
know, the
Mm-hmm.
number it's only 8 or 10% a year.
Okay.
In
Huh.
in the equity markets, whereas I was earning 10% of income alone plus
Mm-hmm.
capital gains during that whole rise. I mean, when the market goes up in 2021,
Mm-hmm.
in my investment management business, the the capital gains income equaled the normal distribution income.
Okay.
Okay, so let's say
Wow.
it was 8%, another 8% from capital gains.
Yeah. Yeah. That's
Okay.
nice. That's nice.
Last year, personally, uh, my portfolio generates, let's say whatever it does, but
Mm-hmm.
I had 6 more months of the equivalent of 6 months income from capital gains.
Right. Right. That's
Okay,
nice. That's nice.
so yeah, it's like walking down the sidewalk and finding a couple $100 bills every day.
Mm-hmm. And are you exiting any positions right now? I mean, you're
Right
probably,
now,
yeah. Mm-hmm.
I'm a what you might call a profit addict,
Okay. Mm-hmm.
and I want to take them and reinvest them because I have so many positions that even when it's all the way up, there's still things that are down that you can
Yeah.
add to, and
Right.
yields are still in the 10% range.
Okay.
So if I can free up capital,
Mm-hmm.
if I can sell an apartment and generate 100,000 in capital at
Mm-hmm.
a time when other real estate I know I can buy some bargains,
Mm-hmm. Mm-hmm.
I'm going to do it because it
Yeah.
broadens my base.
Sure.
I have more buildings on my monopoly board that way.
Oh yeah. Oh yeah.
And that's what I want to do. So even now when I've already used up the profits on the way up and right now we've leveled off and we're a little bit below the all-time high.
Yeah.
Right now we're down at about where we were in July, for
Mm-hmm.
example, in the Nasdaq.
Okay. Oh really?
Okay.
Wow. Corrected that far down. Interesting.
Yeah, it did.
So
And
it's a race
and
about six
to
months gain.
October on the Dow and to um, no, just to November on the S&P as of December
Yeah.
31st. But
Okay.
but you get the idea. So I'm
Yeah.
taking my profits all the time. I want
Sure.
to take a profit every day.
Yeah.
So unless we have a definite 10, 20 days of generally upward movement,
Right.
I'm not going to have a lot of green color on my
Okay.
investment statement, but I'm going to have a lot of dollars in my pocket from
Yeah.
the capital gains I'm taking.
Okay. Interesting.
You
Interesting.
know,
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Now, so that's more in the stock market there. With real estate, what I'm seeing right now are commercial prices have come down a fair amount, maybe
Hmm.
20% or so. We're buying properties at six caps right now in decent North Jersey markets, stabilized assets with value add, where we were buying them around maybe 4.5 to 5 caps, a year, 2 years ago or so, 18 months, 2 years ago, at the more the height of the market. So we have seen prices come down. We've seen us cap rates increase. And now interest rates, they are supposed to come down. They actually just went back up, which is kind of frustrating, but we do expect them to start to tick down into 2025 here. Um,
Yeah, I
and
think they will too.
yeah, exactly. So, what do you see with I know residential real estate's been sky high, at least in North Jersey here, really hasn't come down at all. The market's been kind of stagnant, like growth and values hasn't really been taking off like it has from, 2020 to 23 or so. It's been kind of stagnant through 24 with high interest rates. But it's still very high. I don't think prices have really come down in North Jersey in residential real estate, and commercial real estate has come down a bit, but there's still a lot of buyers on the table, still a very active market. So in my opinion, it's a little bit of a perfect storm to buy commercial real estate right now. What I always say is you marry the purchase price, you date the interest rate, right? So the interest rate's temporary, you can
Right.
refinance it in time, and the purchase price you can't change though, right? That's locked
Right.
in, of course, for eternity. So,
Yeah. Well, that's a really good way to look at it. I might use that analogy.
well, I'm going to charge you for that. It's going
The
to be
marriage and dates,
it's
yeah.
it's
But
a
I have
1%.
exactly the
Yeah.
same philosophy. Like I said, on the equity side right now, I'm buying less than I normally would when I start a position,
Right. Right.
and I'm taking my profits.
hmm
In the income side,
hmm
I'm buying my full normal position because
hmm
the prices are down,
hmm
and I'm trading even at smaller than usual profits because
Yeah.
they just
Yeah.
don't happen
hmm
as often because the prices are down. But when prices are down,
hmm
it means my yields are higher.
Of course.
So when I buy new, I'm not buying real estate, but when I'm buying new income securities,
hmm
I'm getting over 10%. And
Yeah.
man,
Yeah.
and there's nothing wrong with just 10%. You know what I
Yeah.
mean?
Right.
Just doesn't belong there. It's in,
hmm
you know.
hmm Yeah.
So yeah, I'm going full force, normal purchase prices on the income side,
hmm
much less than normal on the equity side
Okay.
because of where they are in their range. And
hmm
with these things that they trade like stocks,
hmm
you can get the visualization of this by just going on something like Yahoo Finance and plug it in the symbol and look
Yeah.
at the 5 year or the all-time chart. You can
hmm
see exactly where it is with
hmm
respect to where it was in 2020, 2021, when
Right.
interest rates were zero. You can see how much higher the price was then
Yeah.
than it is today.
Yeah. Yeah.
And it's just the opposite in the equities.
Yeah. Yeah.
You'll see that peak that it just ran up to, and you'll see right now it's a little bit below that peak, but way ahead of where it was.
hmm hmm
You know, like I
All right,
said,
final
3 years ago.
yeah, final question for you, Steve. What do you think about crypto, Bitcoin? We going to a million? We going to a million on that? What do you think? What do you think? Should I
I
sold my
I'm gonna
coin?
tell you, I couldn't care less.
Okay, good. Okay.
I have never in my life purchased any security that doesn't pay me a dividend
Oh
or
wow. Well,
something.
I bought a Bitcoin. Yeah, I wanted to own a whole Bitcoin. I bought it at 30. Doing pretty good in the
Well, you
Bitcoin
know,
space right now. Doing pretty good.
my my advice, my simple advice in that is set yourself a target and take your profit.
Really? Oh man, it's gold. It's put it in the drawer, man. I got it in cold storage. I learned the hard way on crypto. I was invested in Voyager. Then they filed bankruptcy. Lost my shirt.
Well,
Didn't really understand how crypto worked.
do you understand how crypto works?
No, I have no idea how crypto works. I have no
That's it.
idea what I'm investing in. I just like
Then
Bitcoin.
you're not investing.
I know, I know. It's
You're
gambling,
speculating in.
speculating. It's
Now, one of
complete
the things
BS. Yeah.
that some guru once put in writing somewhere, he said, the sure sign of real wealth
hmm
is when you don't have to speculate anymore.
Yeah, yeah. Well, with my crypto investments, yeah, I'm not very heavily. I'd say like 5% of my, well, not even, is like actually in crypto. But it's interesting. I mean, I don't know, but I had a terrible experience at first in it, and I kind of shied away from it then during the crypto winter, you know, and but kept a fair amount of altcoins and some Bitcoin. Then actually, People's Capital Group owns a Bitcoin, which is nice. Seth and I decided to purchase one after a nice liquidity event, and but we'll see where it goes.
We'll
I
see what
think
happens.
I
If you
think.
can, everybody, there's, probably the worst thing can happen when you speculate is that you're successful. Because
Mhm.
then you'll continue. It's just like somebody who goes to Las Vegas,
Yeah,
If they
yeah.
win, they're going to keep going back, and
Oh
eventually
yeah,
they're gonna lose. But
yeah.
if you keep it at a nominal level where it's not going to affect you or your
Uh-huh.
life or your lifestyle, or your
Right.
wife's not going to shoot you in the
Yeah,
head,
yeah, yeah. Made
if
that
you
mistake.
lose it, then go right ahead and speculate all you want. But I've
Sure.
I've always dealt with other people's money
Yeah,
as
yeah.
much as my own, and I
Right.
never ever would speculate. And I
No, I would
still,
never
if
invest
I
my
don't,
investors' capital in
yeah,
crypto because I don't know anything about it. I'm not
if
a
I don't
crypto
understand it,
expert,
if I don't
right?
understand it, I don't go near it.
Yeah, of course, of course. No, real estate, we know, we trust. The majority of
Exactly.
my wealth is backed by real estate, so that's how I like it. And but it is a kind of a fun, exciting space. The crypto space is kind of I do think Bitcoin is going to keep going up over time. I think there's going to be a lot of losers though, and I did invest in a lot of those altcoins that I had no idea was going on, and got a little taste of success, and then
I
quickly
would I would
lost
make
a
a
lot of money.
suggestion to you.
Hmm.
Take your winnings on your individual Bitcoin
Yeah,
investments,
yeah.
because now there are ETF Bitcoin.
All right. All right.
There's no CEFs yet, as far as I know,
Uh-huh.
and I wouldn't invest them if there were. But
Okay.
I know there are ETFs, and I don't invest in them either.
Right.
But at least you've got some sense of it being a portfolio
Yeah.
of
Yeah.
a collection of these types. And I'm certain there are many producers, right? I
Yeah.
know.
Yeah.
So that would spread it out for you. They may even pay a dividend.
Right. There
In
you
fact,
go.
I know there are some types of investments in Bitcoin that pay almost, I mean, double digit. Uh,
Yeah, but those are sketchy. I just rather own a coin,
those
put
is,
it in
yeah, but at least you're
those.
getting something back.
Yeah, 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 that's true. That's true. But it's if you really look into that, they're like paying interest on money invested in Bitcoin, just assuming it's going to go up. Like if you just own a Bitcoin, you put it in cold storage, you lock it away, 10 years later, it's up 1,000% or whatever. That's kind of the idea on my end. But you're absolutely
Okay.
right. Speculation, you don't want to be investing in things you don't understand. And if you are going to dabble in that, limit it to a very small amount of capital that you can afford to lose, quite frankly, right?
Right.
And
You should. It's
that's
that's the
that's
way you have to look at it. And
yeah,
I, I
yeah. Hmm.
and I my genes are different. I just
Hmm.
I just don't go near anything like that.
Sure, sure. I guess I like a little risk over here. Just some of my personal investments. When I'm investing with my investors' capital, of course, we're the complete opposite of that. So, all right, Steve. Well, how can people reach out to you and buy your book and get to know you a little better?
Well, the book is doing rather well at Amazon. We sold, about almost 4,800 copies or so, including the audiobook
Great.
at Amazon, and then you can get it anywhere else as well. Like,
Mhm.
um, was it uh, Draft to Digital, D2D, and
Mhm.
Barnes and Noble, most of the regular types of stores.
Oh, wow.
Um, I have a website site that's called the incomecoach.net,
Okay.
where they can contact me directly or uh, subscribe to any of my services. One of which is kind of new, um, is a community where it's an educational community
Hmm.
where I give a lot of stuff away, like my selection universes and stuff like that,
Right.
and 50% off of my coaching services.
Okay.
But we also are doing a course about college, I would say a university level course,
Wow.
in different aspects of investing,
Hmm.
um, some with and some without the closed-end funds themselves, but just the idea of, quality diversification and income as basic
Yeah.
principles of investing for anybody,
Right.
right?
Right.
And
Mhm.
things like that. And we're putting that together in the form of Q&As where the members actually participate and ask the questions that they want answered
Mm.
within the course of study, you know?
Mhm. Mhm.
So it's kind of different.
That's exciting. All right, that's excellent, Steve. And what's that one website one more time for our listeners?
Theincomecoach.net.
Excellent, excellent. All right, my friends. So there's Steve's book. If you're viewing us on YouTube, it's Retirement Money Secrets at Barnes and Noble. That's pretty impressive. That's some big league stuff there, Steve. Real quick, how'd you get on the shelves of Barnes and Noble? That's a pretty.
I didn't say I was on the shelves. I'm saying
Oh,
you can get it there.
okay,
I haven't
okay,
actually been in a store and I haven't been in a store anywhere and
right,
seen the book. And when
okay,
I
okay.
do, I'm going to take photographs and
All
everything.
right, excellent. Then you know you definitely made it.
But
All right, my
but you but
friend.
they'll order it for you. I
Okay,
don't know.
got it, got it.
I assume they order it from there's what's the name of there's a company that provides all those types of stores with the
Uh,
books
yeah,
that they
I'm not
buy
gonna.
it. They buy it. They don't call Amazon and get it. They
Right, right,
buy it
right.
through this other guy.
Amazon's probably the best place to get it. Retirement Money
I
Secret.
would say the fastest,
Yeah,
and unless you have bookstore next door, fine. But
yeah.
otherwise,
Yeah.
it's
Mhm.
2-day delivery from Amazon, something like
Oh
that.
my gosh, it's unbeatable. It's I order everything on Amazon.
And the ebook and the Audible book are instant.
Yep, there you go. There you go. All right, thank you so much, Steve. And to our listeners here, of course, my name is Aaron Fragnito, one of the founders of People's Capital Group. We help people build and preserve their wealth in real estate. I've been doing this since 2013 and strictly New Jersey focused, vertically integrated here. Kind of like your father, Steve, vertically integrated in-house property
Vertically.
management. We raise our capital in-house, we manage in-house, and we find our properties as well directly through our relationships. So if you want to learn more about how we help people build and preserve their wealth in high demand North Jersey real estate here, primarily value add vintage multifamily housing is what we focus on. We have some great opportunities right now. Actually, we're wrapping up. We just closed on a building about 2 weeks ago. We have another one we just put under contract. So a lot going on here. Get in touch with us. It's peoplescapitalgroup.com. You can take a look at our past performance there and upcoming opportunities and schedule a call with me, Aaron Fragnito, or a member of our team. And that's all starts at peoplescapitalgroup.com. Thank you so much, Steve, for coming on the show here. Glad to have you, and you enjoy your day. All right.
Okay. My pleasure. Thank you very much for having
Thanks.
me.